What's going on, guys? Welcome back. In this video, we are going to be reviewing the symmetrical triangle pattern. This is when the market pretty much consolidates within a certain area and then begins to break out either to the top or the bottom. So I'm going to go ahead and share my screen so I can show you guys what this looks like. I'm going to show you the pattern, and then I'm going to show you guys on a live chart what it looks like. All right, so starting the screen sharing program. Okay, so first what you guys will see is you will see the market begin to move similar to this right here. And then it'll begin to get smaller. And the pattern that we're looking for, if we were to draw trend lines across the top and the bottom, would be this right here. So basically you'll have price consolidating within this area right here. And then at that point, price will then break out to the upside or to the downside. Okay, so one of the first things we do here is we draw our trend lines. So we can go here, and I will show you guys this on a live chart in just a minute. There we go. All right, so the first thing we do is we draw our trend lines. So after we draw our trend lines, we will notice the pattern like this. We'll notice a trend line across the top, a trend line across the bottom, and we will notice that price is beginning to wedge in a certain area. And then the next thing we want to do is we want to draw our support and resistance line. All right. So basically we'll see that price comes up to a certain point, resistance, and then before it reverses. So we'll have something that looks similar to this on the chart. All right, resistance, support, resistance, support. Then chances are it is going to come here. It'll break this, and then it'll bounce back and retest, and then it'll go higher. If it breaks that, it retests, goes higher. So, and goes higher until it decides to reverse. And also what you'll notice is after it breaks this and goes higher, on the way down, you can normally get in and catch pips on the way up and on the way down, because after it breaks back into this area, you'll be able to catch the retest, down, retest, down, retest, down, until it decides not to continue going down and reverse. So we will look at what that looks like on a real chart in just a minute. But the first thing we do is draw our support, draw our trend lines, and then we draw our support and resistance lines. Okay, and after we do that, we want to wait for the breakout. Now, there are times when I don't wait for the breakout, and you can pretty much anticipate that price is going to move to the upper trend line. Things based on news, earnings, and things like that. Everything can play a factor, but you want to try to get in once it breaks out above or below a certain area or a certain trend line. So let's flip over to TradingView and see what that looks like. This is, of course, a one-day chart, and this is Euro USD. And I made this chart, or I published this chart, because at this time, everybody on Instagram and everybody in the chat rooms, the Facebook message boards, they were contemplating that Euro USD was going to drop because of what was going on. And it's true, I believed it would drop as well. But there was something about this telling me that it may break out to the upside before it dropped. So this is why I published this, and this says warning for Euro USD shorts, could be a short-term bull, meaning it could go up to this level right here and drop. But you see, the first thing I did here on this chart is trend line, upper trend line, then you have a lower trend line. Then within that, you can see this little gray line right here. But after I drew the trend lines, I didn't know that this was a asymmetrical pattern before I drew the trend line. All I knew is after I drew the trend lines, that's the pattern that showed up. So now we're looking at a break either to the upside or a break below this little small trend line, making it down to this lower trend line right here. And then after that, if it breaks this, we were looking for it to go here and you know, beyond. So if you were to, and I can't even zoom out on this chart, but these support and resistance lines that I drew on this chart were not necessarily drawn because of these areas right here. I believe there is some, let's see if I can scroll. Yeah, I can scroll over here. So see how the market came down, bounced up, came down, bounced up, came down. So mark this area, the market came down, mark this area. And this is a daily chart. So you guys have to realize that we are looking for a move from here to here and back down to here. That's a lot of pips. I mean, look at this. This is 1482. So it's 1482 all the way up to 1538. So, I mean, if you do the math on that, I mean, it's 1530, what, I guess it's 37, but you could say 38, but 37 minus the 1483. That's 54 pips from, actually that's 54 pips from this area to this area. And we're not really counting this area right here because price would have probably broke out here and then went higher. But I anticipated this going up, but this is the comment I left. Wait for close above trend line before bullish or before taking a bullish trade. So these are other points right here. Weekly chart shows failed head and shoulders. Basically, it looked like a head and shoulders pattern where you had a left shoulder, middle, and a right shoulder. But instead of breaking this level right here, it rejected and began going higher. So I did see that too many short. And then the second reason is too many shorts. If too many people, it's called a short squeeze. Look it up. If too many people are anticipating the market is going to go down, all of the shorting or short selling could cause the market to spike, or they refer to it as the shorts getting squeezed, because if somebody is selling, then somebody on the other end has to be buying. So that could cause price to spike. Weekly shows uptrend. That's a clear reason right there. If the weekly chart shows an uptrend, you definitely want to be careful and wait for the uptrend to be broken before you enter the trade. So always look at the weekly. No bearish confirmation. So nothing about this told us that this was going down just yet. All right, so that's another main reason for this. So let's hit the play button and see how this actually played out. And my internet connection is going slow because I'm uploading something in the background, which is almost complete. And make sure you guys go check that video out. That's the I'm actually uploading the new PC or new workstation, new computer. All right, so as you can see, this is what price did. Okay, price did not break this level right here. It did over here, very slightly, but you can see price went up to this line and then returned back to this level, closed in this area, bounced back up, came down here. So the move from here to here, that would have been about 100 pips over the course of a few days, a couple of days. And that would have pretty much, so remember, the weekly chart showed an uptrend. All right, so the bias or the market bias was bearish, meaning the market was going to go down. So we would not necessarily want to enter a long-term uptrend, which is, this is not necessarily long-term because this is only a few days, 7, 8, maybe 8 or 9 days or so. But long-term, over 2 or 3 weeks, we would never want to enter an uptrend trade if you notice that the market is already being exhausted and that the market bias is starting to switch and change. But as you can see here, if you were to look on the weekly chart, this price action up through here would have breached what we talked about, Weekly shows uptrend. It would have breached the weekly uptrend because you have multiple days here. Then you have multiple days here that goes down. On the weekly chart, it would have breached the uptrend, and then you would have been clear to take a bearish trade. But I don't trade that long term. I do consider myself a swing trader, but I don't trade long term. I'll trade over a few days, which had we jumped into this trade, it would have played out exactly like we suspected. It would have hit this level and then reversed and hit this level. And that's probably the only thing I would have been looking for on this trade. If you want to go and check more of the chart markups out on the Stamps FX page, I do publish these on TradingView, a few of them. So you can go here and look through, and some of them play out, most of them play out, most of them don't. And you'll see some people, you know, they like to trash talk. Here is, okay, and this is a stock, but the chart principle is the same. So let's take a look at this, because this is kind of what you would see. This is a weekly chart, and this is probably what you would see on a weekly chart if you were to look at the Euro USD on a weekly chart. So here we have Apple, and this is back in 2018. It's trending up, and you can see it's a clear down. It's a clear uptrend, but you'll notice that it breaks the uptrend here. So at that point, it broke the uptrend. So the analysis is simple. It broke the uptrend and is heading down. All right. So, you know, the question that I believe somebody asked was, why short an uptrend? I mean, this is an uptrend, but uptrends reverse. I mean, they don't just go up forever. And one of the ways you can look at that and determine when it will reverse most of the time, or something that will give you a good indication, is when it breaks the uptrend. And that's what it did here. So if you hit the play button on this thing went way down here. You know, I was expecting it to come here and kind of follow this small triangle. See this small trend right here? Thought it would come up, bounce around in this area, and then begin to go down. But instead, this pretty much fell off the cliff. It went from here way down here, slowly making its way up. And of course, I replied, I guess the market was somewhat right after all. But that's just a general principle, you know, and it works for it's reading the chart, and it's price action, and it works for stocks, Forex, or whatever else you're trading if it has a chart most of the time. All right, let's go up and look at some of the more recent. These right here are still playing out. I just published these. What date was this? Oh, this was March 28th. So this was about 2 days ago. This was March 17th, March 15th. So let's look at this GBP USD. Again, this is kind of the same principle where it breaks the trend line. You basically have a clear channel going up. All right. But you notice that this right here kind of rejected at this level. And I'm not saying that the trend is going to reverse here. I'm just saying that the pattern here is to touch this, the top, touch the bottom. So basically what we see here is this rejecting from the upper trend line, and it is headed, or it should head down to this lower trend line and possibly this area right here. If it decides to break this trend line right here. All right, so it'll head to this lower level. But the chances of it getting right here, where I have the blue marked, very, very likely. And that was on the 15th, so we can hit the play button and see if that played out. Let's see. Stop here, and this is a daily chart, and then it decided to break this, retest, and then come down. And remember, it's usually what happens. If you have an uptrend, price is moving around in here. All right. Remember, support and resistance, same thing. Trend line, support and resistance. Price breaks here, breaks a lower trend line. Price is going to come back up to retest, and then back down to this resistance line right here. That happens most of the time. Doesn't happen all the time, but it happens most of the time. And that is what you see here. And also, if you guys are on TradingView, make sure you follow me too. And then this right here was from just 2 days ago. So this is still playing out. So again, you can go through this and you can take a look at this and see my see why I decide to mark up the charts the way I mark it up. But it is the same exact principle almost every time. You'll see me draw trend lines, support and resistance lines, and of course, a few other things, top-down analysis, look at the weekly chart.